Imagine this. You walk into the grocery store, grab a carton of eggs and notice the price has jumped again. Most of us think about inflation only when it hits our wallets at checkout. But behind the scenes, a whole chain of price changes occurs before items even reach the shelf. That's where the Producer Price Index, or PPI, comes in. Before we get started, if you can please hit the like button and give this video a thumbs up, it would really help the channel. What exactly is the PPI? The Producer Price Index measures the average change in prices that U.S. producers receive for their goods and services. In simple terms, it's what businesses pay or charge each other before products ever reach the consumer. The Bureau of Labor Statistics, or BLS, puts this number out every month. Think of it as a wholesale price tag for the economy. If the cost of wheat rises for farmers or steel prices jump for manufacturers, those increases are reflected in the PPI. Why does it matter? Here's why it's so important. The PPI often acts like a crystal ball for consumer inflation, the prices you and I actually pay. If businesses face higher costs, many of them pass those costs on to their customers. If producer prices are falling, businesses may hold off on raising prices or even lower them to stay competitive. It's not a perfect one-to-one relationship, but think of the PPI as the first domino in the chain of inflation. Everyday examples. Let's walk through a few examples of how changes in the PPI eventually affect the average American. Groceries. If the PPI shows rising costs in agriculture, like higher grain prices, that eventually filters into the price of bread, cereal, and even meat, since livestock eat that grain. A farmer paying more for feed means you'll pay more for steak or chicken down the road. Gas and energy. When oil prices rise in the PPI, the increase is reflected later in gas prices at the pump, heating bills, and even airline tickets. Transportation companies also pay more, and those higher shipping costs are passed on through the economy. Cars and appliances. A spike in steel or semiconductor prices means car makers and electronics companies face higher production costs. That can mean more expensive cars, refrigerators, or smartphones for consumers. Healthcare and services. It's not just goods. The PPI also tracks services like transportation, warehousing, or even hospital services. If those costs rise, insurance premiums and service bills can follow. The Fed connection. Now, here's where it really gets interesting. The Federal Reserve, America's central bank, closely monitors PPI data. Why? Because if producer prices are rising too quickly, it signals inflation pressure is building in the system. The Fed may respond by raising interest rates, making mortgages, car loans, and credit card borrowing more expensive. On the other hand, if PPI is cooling off, it's a sign that inflation might ease, which can lead to lower interest rates and borrowing costs. So, even though you may never read the PPI report yourself, it indirectly affects the cost of your loans, rent, and even job opportunities, because businesses also adjust their hiring practices based on costs. A real-world scenario. Let's imagine a chain reaction. The PPI shows a spike in lumber prices. Builders now face higher costs when constructing homes. Those costs are reflected in higher home prices for buyers. The Fed, worried about inflation, raises interest rates. Suddenly, mortgages are more expensive. So that single line item in the PPI, lumber, can ripple out to affect how much you pay for a home and what your monthly payments look like. In closing, at first glance, the Producer Price Index might sound like just another government statistic. But in reality, it's a behind-the-scenes scoreboard that predicts the costs we'll all face in the coming months. Whether it's groceries, gas, housing, or even your credit card bill, the PPI plays a role in shaping what life costs the average American. So the next time you hear PPI rose by 0.5% this month, remember, it might sound small, but those numbers are already setting the stage for your next trip to the store, your next big purchase, and even your financial future. Thanks for watching Economic Now. I hope you enjoyed the video.